I am recording this outside. Hopefully you can hear me okay. I don't have my normal studio. But what I wanted to do is quickly talk to you about the Fed rate decision, talk to you about what we discussed yesterday evening, and thankfully, after my disastrous call about home prices, I nailed the Fed call. If you remember our conversation with yesterday, I think it went off about 5 p.m. I highlighted that the Fed rate decision is nothing. What it was going to be about and what was most important to me was what's often called the dot plot. I wanted to talk about if our rates going higher, our rates going faster, and our rates staying longer. Then I wanted to talk about GDP, unemployment, and then finally, Powell's prepared remarks and his questions. Thankfully, after again this morning's big miss on median home price, we nailed everything in the Fed announcement. First and foremost, we got the 75 as expected. Didn't think he had the stones to go 100. I wish he would. It is what it is. But what is far more important is the dot plots clearly show rates are going higher, they are going faster, and they will stay there longer than the market expects. For me, this was the number one thing to watch today, and it came in as expected. It is quite possible that not only do we get the 75 today, but we get 75 on November 1st and may get 75 or 50 December 13th. If you've been watching this channel for any length of time, that is what I called for months ago. So we are on track to be higher, faster than the market expects. Then we look at the dot plot for when could there be a cut. Thankfully, there are no rate cuts in the dot plot next year. The Fed is going to get to its terminal rate and stay there. Terminal rate also higher than expected. The average terminal rate, I believe, is 4.8, which in Fed speak means between 4 3/4 and 5%. I do not think the stock market expects it. I would expect the stock market to be down. I think the stock market has to reset. Remember, there are lots of challenges coming. In addition to that, we had to see what they thought about GDP, what they thought about unemployment. They now are forecasting a 0.2% GDP for this year and 1.4% next year. They are talking about unemployment going from 3.7 to I think it was 4.6. I believe they are overly optimistic on both accounts. I believe their GDP forecast for next year at 1.2% is too high. I believe their forecast for unemployment is too low. I believe their forecast call or dot plot for the funds rate is about right. I believe the bulls, the Cathie Woods, the Gunlocks, the Elon Musks who are calling for a Fed pivot or a Fed cut, they're just shit out of luck. There's not one coming. There just isn't one coming. If you are selling expensive vehicles, you have to deal with higher loan rates. If you are selling housing, you have to deal with higher loan rates. If you are in a business that's leveraged to debt, it is going to be expensive for the time coming. And then in the Q&A section, Jerome Powell talked about the housing reset question. I think he talked about in June. And he is really talking about, for the first time, a housing correction. I have heard other channels already talk about a correction meaning 20%. That is not the definition that I have long followed, and nor will be one that I repeat. To me, 20% is a crash. In any calendar year, 20% is a crash. A correction is 10%. At least as of today, I am not changing my call of flat. I'm still calling for a 50% crash in transaction. I think that 50% call is more solid today than it was yesterday. Price, we're going to have to see. I was obviously wrong this morning and own that. I am not changing my 2022 call. We only have a few months left. I think it would be disingenuous to change. I have not really made a 2023 call except to say I expect real estate to be flat for 5 years. I don't know. As I think I've said a couple of times in the last week, I have to get to March. The next 6 months are going to be painful. Painful in ways that I would wish on no one. We're going to see where we go. Sorry about that. I tried to hold that cough back. We're going to see where this goes. Winter is here. If you're in the housing business, you're in trouble. Come March, we'll see. Where are rates? Where's GDP? Where is unemployment? How bad's the recession? I don't know. Maybe. I'm not going to change my call because of one meeting. That would be disingenuous to you, and it would certainly be something I'm not comfortable doing. So that's what I think. I think the Fed meeting went exactly how I expected. The rate increase, who cares? The dot plot was everything. I can't tell you enough. If you haven't looked up the dot plot, or sometimes called the SEP, you need to look at that this evening. The Fed is going higher, faster, and staying longer. It is going to break things. It is going to make a lending business harder. It is going to hurt many, many companies. It's going to make the dollar stronger. The Fed's going higher. The dollar's going to be stronger. It's going to hurt emerging companies. And, oh, by the way, we have QT going on in full effect. So, at the end of the day, it feels good to be right. This morning hurt. I am going to create another shirt. Some of you asked. I have a shirt that says nailed it. So I'm going to create a shirt that says swing and a miss, I think is what I'll create. Because I want to own my errors just like I own my wins. I think that is only fair. So I sent them that message today. When it comes in, I will share with you. But yeah, that's what I think. That's what I think is going on. I hope you have a wonderful day. Lots going on in this world. If you're interested in real estate, do the work. Don't pay list price. Ask for closing cost credits, rate buy downs. Only do great deals. I really want people to hear me. If you watch some of my older videos, you hear about good and great. Good left the building. Only do great deals. Do the work. Write offers. If you're in a market where Open Door is, write crazy low offers. Write offers that you're embarrassed at. Don't do it on first day listings. Let's be okay with that. But yeah, it is going to get interesting. It's going to get fun. All right, everybody, take care of yourself. Bye.